Talks with JPS Realty Group. I'm Yvette, Jason, Jake, and today we're getting in the nitty-gritty and answering all your questions. I mean, one of the first questions we always get asked is, where do I start? How do I buy a house? And we are bringing you the people that help you navigate through buying a home. And we have Dylan Gravelin and Mark Meade here today.
Thanks for coming, guys.
Yeah.
Thanks for having us.
Yes, we invited another loan officer, a woman, to kind of so we could have a good. But she canceled on us, so
She wasn't feeling well
yeah,
today.
no. Well, we're gonna give her a break.
That's
but,
okay.
hey,
Okay.
You guys got to represent. So
Happy to be here. Great.
yeah.
Yeah, Dylan, you're from Neo Mortgage,
Yep. Neo
And-
Home Loans.
Neo Home Loans,
Yeah,
and
same thing.
then we have Mark Meade, and he is in office here with American National Bank.
Which is now called still American National, or did it change?
Still American National.
Okay.
Soon to be Associated Bank.
Okay, soon to be Associated Bank.
Really?
Okay.
Cool.
I didn't know that.
Is that going to make any, are there going to be any changes with that transition? Are we going to, I bank with American National,
Yeah.
so are
There'll
we
be,
going to
yeah, later on this year in October when those changes will happen. The name change, of course, will happen at that time. On the mortgage end of things, we're changing our products
oh, okay.
and offerings starting on Monday, June 1st.
Better?
Yes.
Oh, good.
Mhm.
Okay.
Yep. More selection, more options. Absolutely.
Cool.
All right. Awesome.
I'm just curious, you guys, when people come to you to get a loan, what are some of the first? Give me some of the first steps. Kind of lay out things on how it looks like when we send those people to you. I don't know. Do you want to go first, Mark?
Go
Doesn't
for it.
matter. Okay, sure. Yeah, thank you. Well, thanks for obviously having us here, extending the invite. I appreciate it, and congratulations on everything that you have going on and being around the office. Over the years that I've been here, I have to say that I love the positive vibes that I get from everyone around here.
Awesome.
So, congratulations to each one of you for doing this and putting together this team. I mean, it's amazing. So
Thank you.
good things are happening.
Yeah.
For sure. So to your question, when the buyer comes in, the first time home buyer, many times, they have nowhere to, they don't know what to do. So it begins with a conversation. Hey, let's talk. Let's find out about what your goals are, kind of what you're looking for. So it starts with that initial conversation, which then works into getting loan information or loan application information. So just working through the basics. When I talk to people, it's name, address, social security number, date of birth, where you work, how much you make, all of those kinds of what I call basic things.
All the stuff we really don't want to ask.
Right.
We don't want to get into that personal stuff. We
Yeah.
just want you to give them the loan so we can sell them the house,
Yeah.
right?
Yeah.
Exactly.
Yeah.
But that comes with it. But initially, it's just a conversation. Okay, what do you have in mind? What do you have available? Just what are your what are your goals? What are you trying to accomplish? So going through everything with that, which involves looking at credit. When we get to that point, and then also any money available for a down payment. But then we also talk about down payment assistance if they need that. Of course, people do save money and maybe have money for savings on a down payment for a home, but not always. When I prioritize, when I talk to clients, I think credit is kind of the main priority. Without that, it makes the rest difficult. Kind of secondary, it would be income, being able to document income, prove income, how much you make, those kinds of things. And then
So they
third,
can't have it under their mattress, right?
right. Third, it's down payment. But there's so many options to get around that with low or no money down. So that's kind of on a list of priorities. That would be kind of third, and then we talk about those options, things that are available, whether it's grants, whether it's loans, the loan program itself, if it's zero down, and those types of things.
Cool.
Yeah, there's a lot of misconception on, a lot of times buyers, they don't understand that you don't have to have 20% down to buy a home, or the misconception of, even we had the discussion on credit score.
Yeah.
I mean, your credit score, yes, is very detrimental to purchasing a home, but what some people might think is a bad credit score, it might not make you not be able to qualify for a home
Right.
per se. And what are some examples of that?
Yeah, so the credit score obviously the higher the credit score, the better, maybe the more options that a person has. But if a person has a down payment and maybe their credit score isn't, and credit score is just a piece of that, it's kind of a good indicator. But also looking at the credit also is also considered, not just the scores. So, but credit score is a good indicator as far as what they qualify for now programs. But if they don't qualify for something right now, maybe there's some things that they can do to get to a point where they can qualify if that's the direction that we decide that we're going to go on it.
Now, on down payment assistance, is there, I see anywhere from 3.5, but I've heard that there are some that are no down payment. Do you carry any of those programs?
Yes.
Yep. So
Take that one.
IFA products,
Yeah.
right? So you can get up to 5% of the purchase price. So you can actually, borrow more than the home is worth. I always chat through the pros and cons of that. Yes, it's great, less money out of pocket, but I said, hey, you're going to be in this home for a while, because if you're forced to sell in 2 years and you have no equity position, right? So kind of what you were saying, a lot of the strategies that we come up with when it comes to financing has to do with the next 3, 5, 10 years. It's very easy to be transactional and say, oh yeah, sure, we'll just put you into a down payment assistance program, close the deal, job's done, best of luck. Whereas, try and take more of like an advisory approach and look at the long-term impact of this transaction and how it relates to everything. But to your point, yeah, there's 3.5% down, so if you're using FHA, for example, you have a 3.5% down payment, but then you can finance that 3.5%, or you can do 5%, and then you're actually lending more than the home is worth, which can sound scary. It's not, as long as you make your payments, and I would say as long as you're not going to plan on, moving, and we have to talk through. You probably can't refinance very soon either, because you don't have that equity position. So there's pros and cons to, I think, every product, right? Conventional has its pros and cons. FHA has its pros and cons. Some people think really negatively of FHA. I don't believe negatively in FHA. I think that's kind of a misconception, but it allows for higher debt to income ratios. It has a lower down payment assistance if you're a repeat buyer, right? So a lot of different things within each product. That answer your question?
Yeah, absolutely.
The long-winded version.
And it just all boils down to, you have to get in touch with the lender so that you know everything, all your options in moving forward when buying a home, for sure.
Yeah, I think the biggest thing is just education
Yeah.
for buyers, especially first-time home buyers.
Yes.
It's just, if you can educate, that's really what they need. Not only around the home purchase, but in my opinion, just finance in general. I think, not to get too into the weeds, but there's just a major lack of education around personal finance. So
I
that to me is like, okay, yes, we're going to talk mortgage and do those things, but we're also going to try and make sure you're on the right path.
Yeah, you don't want that thing back in a few years.
No,
right?
no. I don't need a EPO really pay off, or
Yeah.
So
Now, if somebody's struggling to essentially get a loan, what's your coaching process look like for that? How do you guys kind of go into that to coach them to be able to, get them pre-approved?
yeah. So, and if you want a credit score number, and every lender is going to be a little bit different here. I know for us, it's 580, right? So 5 and above, we can do it. Now, granted, like you said, though, just because you have a 590 doesn't necessarily mean it's going to approve out, right? But let's say someone isn't quite there, right? Let's say they're below that number. At that point, it becomes just a credit coaching call and game plan, right? Sure. And so the first thing I look at is credit card utilization, right? So what is your total credit limit? How much of that are you using? General rule of thumb, keep it below 30%. If you want to see scores boosted, between 5 and 10%. I think the one thing that people miss with credit card utilization is how credit bureaus look at it, and it is based on the day your statement is produced. So I'll have borrowers come to me and they'll say, well, Dylan, I paid my credit card down to $5, like you said, never zero. I said, good job. I said, but when did you make that payment and when is the statement produced? Because if they go rack up $3,000 in charges between when they paid it down and the statement was produced, it's probably negatively impacting their score, right? So I'll have to coach some people to make 2 payments on their credit cards. 1, don't miss the due date, right? Pretty black and white. But number 2, make sure utilization is there on the day the statement is produced. So, and again, we could go talk forever on other ways, but that's usually the first thing I look at when someone has a lower score. It's a lot of times it's credit utilization. And then things like late pays, unfortunately, just kind of take time. And then if we take it to the next step, we partner with a true credit repair specialist. I usually use that as kind of if they immediately need it, because that can cost money to go through that route. But, we have a pretty good general sense of, keep your credit utilization low, make your payments on time, your generic stuff. Then if we want to get kind of in the weeds and like dispute trade lines and stuff like that, I'll say, okay, now I need to get you to a credit repair specialist. And then that's the next step. If they're like, hey, I need my score up now, like I need to move.
Sure.
That's a good piece of info. In all 31 years of doing it, I had never heard that a good credit utilization is 5 to 10%.
Yep.
And not to be over 30. Is that right? Is
Yep.
that what you're? Because I mean, like first time buyers or people out looking, or even my kids. It's nice to be able to tell them that, hey, try to keep your utilization 30% or less.
Right.
And so that's a great tidbit of information that I never knew. So
And that's the thing, even with my own, everything with my business is on my personal card. So I'll have a couple months where that balance might get up, but I'll know, hey, if I'm going to make a large purchase in the next 3 months, I want to be very cognizant of where my utilization is at, because I want my score at the highest before I go pull credit, right? If I know I'm not going to buy a house or buy a car, now granted, no, you don't want to have to carry credit or balance regardless, but I'm like, okay, I could, it's okay if I carry a little bit of a balance now because I'm not going to pull credit. It's really important though, and that's why I try and get to borrowers well in advance of a home purchase. So I can say, how many times do we get which is great. But someone calls us on a Saturday and like, hey, we need a pre-approval right now,
Right.
And their credit score is not there, or, oh man, I wish I would have known to pay that car down before we pulled credit. I'm like, well, we had to make an offer in 24 hours, right?
That's
So,
interesting.
being proactive, taking, education, that's really the main things.
And that's important because I don't know about you guys, but I get calls from buyers and they have a really hard time deciding whether or not they want to contact you.
Yeah, they're
Because
worried.
they
Yep.
and I try to explain to them, I said, even if you're not sure about whether or not you're going to qualify or not, I mean, just getting in touch with the lender will help you even if it's 6 months from now. I think it's really important that we stress that it's more important to pick up the phone when you're wanting to buy a house and you need financing to contact the lender or contact us to advise you on who to use for a lender. Local.
Yeah.
That's what I
Yeah.
say.
Yeah.
Use a local lender.
Please use a local lender.
On the weekends and ask for pre-approval
Yes.
Absolutely.
at 10 o'clock at night, right?
The sooner the better in the process.
Yeah.
So then that way, as Dylan said, if there's something on the credit, if there's a surprise they don't know about, those things can be, but I get it. Usually people have to have a reason. So, they found this house, so hey, let's go for it. And but sooner the better is what I always advise people on. And then if you aren't able to, and then you're searching for the perfect home, and that'll come. And sometimes it takes a little bit longer than other times.
And it's funny, I actually just made a social media post on this, I think yesterday. I said, people have to get financially naked in front of us.
Yeah.
And it's like, it can be intimidating.
Right.
Like, I get it. And, and I respect, even some of my friends are like, hey, I don't know if I really want you checking out my stuff, dude. And I'm like, I get it, honestly. Like, no hard feelings. I totally understand that.
Right.
But, I tell people we see thousands of, I mean, how many profiles have we seen? It's like, there is no judgment.
Right.
Like,
Absolutely.
if I can put you in a better spot than before you met me, then that job, I'm okay with that.
Yeah, it's
Whether
no
you
different
buy
than
a
going
house
to
or
the
not.
doctor.
Yeah, yeah.
You're there to help. You're gonna.
If you don't go, you won't know.
Yeah.
Right. So, yeah.
Yep.
That's awesome. That's awesome. What's some of the other challenges you guys face? Kind of some do's and don'ts if you were, you have buyers coming in, even maybe someone going to do a refinance, maybe a first-time buyer. What are some of the challenges you guys see?
Sure. Yeah. Some challenges. Well,
I mean, like
It
for
could
instance,
be-
don't go buy a bunch of stuff in Nebraska Furniture
Yeah,
Mart before
yeah.
you're good. But I mean,
Yeah.
some things that have, busted deals for you, I guess, in the process. And
major big purchases is a big thing.
Yeah.
Let's take things one step at a time, so to speak. With let's get the house
yeah,
under closed and all good, and if before buying anything, a large purchase that's going to have a payment, or shopping, running up credit card balances for purchases.
Don't get a
that
new
type of thing.
job.
Job changes, that can be a surprise. If that's a surprise, that could be a challenge, absolutely. But new things but also staying on monthly payments too. So I've heard stories of late payments coming up in the process. Somebody forgot to make a payment on time, and so that can cause some challenges. Especially recent late payments. Like Dylan said a little bit ago, on the credit challenge part of things, the further out that those maybe challenges are, or any kind of late payments, or what we call derogatory credit, the less impact it has on credit. But if something's fairly recent, in the last year, that can have a bigger impact on credit scores for sure.
okay.
I think one I had recently that comes to mind. I won't
Hey, give us some horror stories.
Well, I won't
We
get
want to hear them.
I can't,
Just throw them out. You don't have to give names.
Say
Just give
names.
us the horror stories.
guys. We said we needed X amount of dollars to close,
Yeah.
and it was proceeds from their sale. So there was no chance of any sort of down. Like, we needed this amount of money, and he had it. Well, he spent it, and so we had to get pretty creative. We closed the deal, but yeah, that happened. So that was one that's fresh in my mind. Was don't. If your lender says, "Hey, we know you have this money, keep this amount of money. Don't spend it.
Don't spend it.
Yeah. The other thing that, and I think this is a good takeaway here, is that early in my career, I would be maybe more inclined to give pre-approval letters maybe sooner than I should have. I think and not that it would kill a deal, but it caused more stress and headaches halfway through a deal. So now I'm pretty much getting everything possible up front. And some buyers don't love that. They're like, you're asking me for a million things.
But
I'm
they're
like,
solid then.
I'm doing this. So once you order a contract, we are guaranteed to close.
Yeah.
I said, we will not have this deal fall apart because of me.
Yeah.
And I go, I'm not doing it because I want to just annoy the crap out of you. Right. So I think, like, for first time buyers, just going in knowing, hey, there's going to be a lot of documents.
Get naked right away.
Literally.
Right.
I'll do the heavy lifting up front. That
Yep.
way it's done.
Yes.
And so, you live and you learn through some of those early on, and I was like, yeah, we're not going to do that again.
Right.
And unfortunately, in this business, you learn the hard way. And
Absolutely. Yeah.
after reps, it's like, okay.
So what's ideal to you if you had a new buyer come to you? What would you say what should they come up with? If they came to meet you to get a pre-approval, what do they need? What documents do you want up front to help them get a pre-approval right away?
Yeah, I mean, your basic documents, if they're W-2 employee, 30 days of pay stubs, 2 years W-2s, 2 months of bank statements, right? If they're self-employed, 2 years tax returns in lieu of the pay stubs and W-2s. Those are like your main ingredients, right? Outside of that, if there's child support, we're going to have to document that. If they're paying it, we have to make sure they're paying it on time, right? All the, there's a lot of different things. If there was a divorce and this liability on their credit report is no longer theirs, okay, we got to document what that looks like. A lot of different things that could come up, but the main things are going to be pay stubs, W-2s, bank statements, for the most part, or tax returns as self-employed at a high level. Would you add anything to that?
No.
Yeah.
No, that's not.
We're just trying to make your job easier.
Yeah, we're
when
trying
we
to
send
inform people.
people
Yeah.
to you, and what other things could we do to make your job easier? What should we be telling our client that maybe we're not? And
How long?
Yeah,
No.
What shouldn't we be doing, and what should we
Well,
be
let
doing?
me see here. No.
That's a good question for me.
Yeah, because
and
Jake's
me.
newer. I mean,
So
yeah.
that's a great,
Yeah.
question. What are, I guess,
What is the model realtor supposed to do to make your job easy?
Well, I think it's more on the clients, working with them and having them, asking for that information, like you said, Dylan, and them getting that information to you or documentation that's needed. So, somebody who's willing to, give you that information, getting naked again, financially naked. So, just easy, makes our jobs easier.
Yeah.
So we're not having to go back and ask for repeat information.
Yeah,
So,
I think when you can spin it and you have a true like lending partner, and you can say, "Hey, this is my finance team. They're going to take good care of you. They're not doing whatever they're going to do," and don't use that wording, but when you come together and you have like a realtor and lender, and there's like synergy as a team,
Mhm.
I think that literally changes an entire experience for a buyer because and that just comes after working together for a while. But I hear horror stories, right, of the agents telling them this, and the agents maybe getting too involved on the financing side of things. Oh, they're not going to need your W-2s, and we're like, what? Or vice versa. Maybe we're getting too involved on the realtor side. Like, oh yeah, no, you should not be having.
You need to have them
spend-
pay this closing cost or do this.
Right,
or,
right. So it's kind of like, hey, everyone, I always say I try and stay in my lane on the financing side, and then my teammate here is going to take care of you on the real estate side of things. But I mean, to tee it up to a lender is just, hey, I guess I don't know how I would word that if I was a realtor. I would focus just more on teamwork.
Yeah.
And we're going to do everything that we can to get you to the finish line together.
we all have the same goal. We're all working
Yeah.
together, and everyone has their job to do.
I mean, I think it's important to have, if you have a lender you trust, I mean, I always tell folks, I don't really deal with the financial portion of it. That's between you and the lender, but I can send you to a couple great lenders.
Right.
And, they'll help you and help you find the best program that's going to work for you. And there's so many different programs out there. Are there any new programs that you guys are aware of that excite you or right now you're using in today's market that you think are beneficial that we should share with people? Or is there anything out there that comes out to you right now, speaks to you?
Well, I mean, outside of your typical IFA down payment assistance, I mean, the non-QM world. So, and this could be a whole nother podcast, but things like bank statement loans, right? You have a self-employed borrower that writes off all their income. Your Fannie Freddie, your conventional mortgages and your FHA mortgages are going to say no, right? The bank statement loans going to look at your bank statements instead, right? So there's a solution for those type of borrowers. Things like DSCR loans, right? For investment properties, no income doc loans. So those are kind of like niche products. Typically have a little bit higher interest rate, require a little bit better credit score, require a little bit more down. But there are kind of some cool niche things that I've kind of started doing more of recently that they're pretty cool.
I didn't even know those were back. I mean, I remember those before 2008 when we had the housing crisis. They were making loans like that, and I thought all those went away, but they're coming back, huh?
They are, and trust me, the guidelines are still strict as conventional. I mean, you're looking 700 plus scores, minimum 20% down, probably. But yeah, there are those out there, and I think they're fun. They're challenging. They're not. My counterpart maybe doesn't love dealing with them, but I do.
Yeah, and we have, with the rollout, new loan programs, we have a one-time construction loan close that I'm excited about.
Oh, yeah,
that
those
we've
are
not
awesome.
done. We've done. We've traditionally, as a bank, have done two-time closes.
Yeah.
This is a one-time close, so that's exciting.
So it just rolls into a final?
Yes.
Wow.
No need for a permanent at the end of the construction period. So that's exciting to me. And we have some portfolio programs and our own grant programs as well, which is exciting. Being a lender in this 28 years in this business, I've, although 22 years at the same bank. So, seen a lot of changes over the years, but, this is an exciting change that I'm looking forward to.
What are you guys seeing rates today? Just out of curiosity, I know they change every day. I know they ticked up a little, but if you or this week, what are they around right now? Just a 30-year conventional right now.
Yeah, I think right around 6.5.
Is that what you guys are seeing?
Yeah, which is up from first part of the year where
Yeah.
they were 6, even below 6,
Yeah.
high 5s, which was pretty exciting for some people, especially conversations that we've had. But since the conflict in Iran and oil prices is putting pressure, all of those kinds of things. So still, I mean, they have been higher, but 6.5 still is, comparatively, if you look at rates, especially over the last 30, 40 years, isn't so bad.
Yeah, to me, I mean, when I started in the business, it was 1994, 95.
Yeah.
And I remember rates were just 8.5%, 9%. And I remember they were going down regularly. And I made myself a liar many times because I kept telling people they're not going to go any lower than this. And then they would go to like 7 and then 6.5. And then it's like, I remember when they were like 4 and I'm like, there's no way they're going lower than this. And they got down, upper 2s, low 3s. And it was like, I mean, honestly, probably not even healthy rates, right? I mean, but
No.
in the whole scheme of things, when you look through all of time, a 6.5% rate's a great rate, right? I mean, you think about it, someone loaned you $100,000 for under $600 a month, or right in there. I mean,
Yep.
or right at $600 a month. That's crazy.
Yeah.
I mean, so it doesn't seem that bad to me.
Well, and I think the other thing is, there are ways that we can structure a deal. Now, granted, it might take some seller concessions to do it, but I tell people we have many buyers below market rates just because we're
I know.
negotiating seller concessions. We're using the seller's money to buy down the rate. And whether it be a 2-1 buy down, permanent buy down, right? There's all different types of buy downs, but again, people don't know what's possible until you ask, right? So that's, I think, the biggest hurdle is, like you said earlier, right? People just have to kind of get over that fear, whatever they have of speaking with a lender, because it's kind of eye-opening once you realize what is possible. I think especially just with affordability and stuff nowadays, it's just kind of in the back of everyone's mind, like, housing's just not for me, right? I'll never buy a house. But I think if they would just be a little bit more open and just having conversations, they might realize, wow, I can pair a down payment assistance program with seller concessions and bring $0 out of pocket to close. Didn't know that was possible, right?
Why wouldn't
I can buy my rate down to 5% today. Yeah, you can. Well, didn't know that. So, you don't know what you don't know.
Absolutely.
I have 3 young kids that hopefully will all be buying. Well, I say young, they're anywhere from 20 to 24. Technically 4 with Corbin that's lived with us all these years, and I would say they're all going to be buying houses in the next year or two. And what kind of advice would you give them?
Well, I'm asking you, as a realtor, what kind of advice are you giving them?
Well, I full disclosure, being a realtor, it's hard when you saw what prices were and what they are today. I showed a house yesterday for $225,000. That, I mean, it wasn't that long, and it will sell today, I believe.
Absolutely.
And it wasn't that long ago, not long at all. That house was $170,000 house, and it needs a ton of work. And I'm going, okay, I guess it's hard to acclimate yourself to this new market, even though we're working in it. And sometimes, in some ways, I think it's easier being like Jake and being new because he's used to it. Where I remember the old pricing.
Yeah.
So my kids, here's what I'm telling them: I'm telling them you just need to get in the market.
Yep.
I know it seems high, but I promise you, any 5 to 10 year window, when you generally look back in the Midwest, you'll wish you would have bought 5 or 10 years earlier.
Yep.
Yeah.
And I can give example after example of that. So I'm telling them, if the payment works and you think you can make it work and you like the house, just get in the market.
Yep.
And then you're going to get the upside, and Sherry and I, we bought a place in Scottsdale a year ago. And at the time I was just really like fighting the prices. Like, this thing's 1,100 square foot, and I'm like 3 bedrooms, 2 bath, and it's tiny. And I'm like, and I'm paying what for it? But I thought, you know what? I'm just going to get into it. So as it goes up, maybe I can trade up later, And that's kind of the same way I'm thinking about it for my kids. I hope that's right.
I know my father-in-law told us when we first bought our first house, he said, trade up every 3 years or 3 to 5 years, because you're going to use that. Eventually, you'll use all the equity in your home to buy your final home. And he was accurate. I mean, it just, we moved about 4 or 5 times, and I mean, it's amazing what you don't think about it in the time, because I even remember our first house, we bought it for like $40,000. Our payment was like, I mean, I think we had 10% interest, and it was like $400 a month. But to go up, to a $60,000 house, I was just like, oh my goodness. And gradually we just kept getting more equity built in each home that we had. And it really does. I mean, you showed a chart at one time.
Oh, yeah.
How the market, I mean, besides 2008, when the market crashed a little bit, it didn't really affect our area so much, but it just kept growing and growing and growing. And this, what was that, over like
I think it was
20
if
years,
you wouldn't have bought a house, it was like, if you would have waited 20 years ago,
Yeah.
the difference of what
God.
Yeah.
they cost. And I have some friends, and I won't say their names, but I sold them their first house, and they're some of our very dearest friends. It was an infill house in the mid to late 90s for $77,000, and you got a $10,000 grant, and they lived there for however long till the grant was forgiven. When I sold it for them, I sold it for like 110 to 115 or something. And at that time, they, the grant was forgiven, so they only owed like 50. I sold them a house then in Briarwood back then, and back then that house was 160,000 brand new. And they rolled all their money, in from the other one, the 50,000 they made, bought that one, and then they, say owed 110, 120 in the Briarwood one. They lived there a few years. I sold them that house for 239, that they had bought for the 160. They bought a house in Bentry for 310. I mean, these are friends that just worked their way up. And now that house today, I would say, is they 310, and they finished the basement. I'm going to put it at 700 maybe. And I'm looking like, these guys started in a $77,000 house. They're living in a $700,000 house, and they don't owe, I mean, and again, that's over a 25-year period,
Yeah.
but they don't owe, and they have this. So, I mean, there's a lot of those stories, if you keep, rolling it, that you can really gain some equity.
Well, I think too, there's a lot of people that bought a house during COVID. I mean, I had a conversation weeks ago with someone that has a growing family, and now kids are having to share the bedroom. But the reason they don't want to move is because they have a 2.5%
Oh, yeah.
The lock
interest
interest.
rate,
Yeah.
and they don't remember what interest rates were before COVID.
Yeah.
So it's crazy to hear all of that stuff too. You have people like your kids that they're trying to buy a house, but they're like, this is crazy how much a house is worth. But then you have people living in a house that won't move because they're like, well, we have this 2% interest
But the
rate.
amount of equity that they probably have from 2020
Oh, yeah.
to now,
Oh
I
yeah,
think it was
1,000%.
was it increasing about 6% every year for about
It varied,
5 years?
but yeah.
I think it's kind of leveled off a little bit this last year, but I think I was figuring like 6% per year that the housing market was growing, and it was.
Yeah, nationally, I think 2021 was like 18%, something like that during COVID. So,
Oh yeah.
yeah,
It's amazing.
But no, kind of back to your question, advice for your kids, I would say save as much as possible. Number one. Number two, credit. And a lot of times it's just, hey, if you don't have a score, I know some people are anti-credit cards, but you kind of have to have
In
one
today's
nowadays.
world, it's pretty hard to
Kinda
get
have to
around
have
them,
one.
and you can pay them off the end of the month.
Exactly. And I'll tell, same thing we kind of talked about earlier. I said, hey, if you don't have number one, save as much as you can. Number two, if you don't have a score, you need to build credit. Go just get a secured credit card. Don't need to change the way you spend money at all. Buy a tank of gas, pay it down to $5, let that statement produce, rinse and repeat every single month.
Yep.
And you'll keep your utilization really low. It'll be $5 of even a $500 credit limit. It's great. And then do that for 6 to 8 months, and you'll have a score if you don't.
It's a place to start. It's a starting point.
Yeah.
It doesn't have to be that way forever, but it's a way to get started. Like Dylan said, credit's important, paying bills on time of any credit that you do have. Also savings, having, even when you're, say, a first-time home buyer buying the first home, it's always good to not use every dime that they have for that purchase, because you're buying a house. Things are going to happen.
Yeah.
There's maintenance. So that's where maybe some of the IFA down payment assistance programs, those things help, because just because you've saved up that money, which is great to have a savings, you don't necessarily want to use all of that because you still want to have a savings account after you do purchase the house.
Yeah, in case of emergency, the hot water heater goes out or something, you need.
Right.
Some people ask me about home warranties, and I don't always push home warranties, but I always tell people if the water heater going out or the furnace going out is going to have a substantial effect on your finances or really cause you some serious stress, maybe you should look into one. If you're that tight strapped, if you have the money where you can write the check, then maybe you don't have to worry about the home warranty. But
Something we mentioned earlier too is financial literacy or financial education. I think budgets. I say budget, having a budget, but I think for a young person, a young adult like my young adult children, having a budget, like knowing where your money goes, just paying attention to it. Like how much money are you spending at Scooters or Starbucks? And
Yeah.
where is your money going exactly? But putting money away in savings, keeping that savings balance out there is important, but knowing kind of where your money's going is
A
important
high
too.
yield savings.
Yeah.
Get at
We
least
have
3%.
college age students, mine graduated, and but with their student loans, are you seeing a lot of people are renting now because they have these student loans, and what pushback are you seeing as far as, because there's been a lot of changes also with student loans that are probably really affecting a lot of young people.
Mhm.
What advice or what information do you have in regards to how to get these kids to be able to move out of their homes or their parents' home to get a house themselves?
Oh, go ahead.
Well, when it comes to repayment on student loans, I like getting the lowest payment possible when those go into repayment.
Mm-hmm.
Pay extra if you can, that's great, but having a low monthly payment, well, that's gonna help on the mortgage side of things because you're gonna have that low minimum monthly payment. Now, if you're able to pay extra, good for you, especially with student loan interest rates. They may not be the best nowadays. There's been a lot of changes with student loans, but I like having the low monthly payment option out there. But having the option to pay extra principal, double up on payments somehow. But if you end up buying a house, if you're not able to, you have to be able to make your payments. So having a low payment option, I'm a big fan of that.
I would say do not ignore them.
Yes,
Have
first of all,
two
yes.
cases of people that thought they were going away
Mm-hmm.
I want
and just decided they weren't going to make their payments, and their score went from 700 to like 710 20 to under 600 because they missed a payment and it was 90 days late, and there's really no coming back from that. Well, it takes time. So number one, don't ignore them, because I think, again, not to get political, there's a lot of talks of they're going away forever, now they're back, then they're going away, then they're back, right? If it's due, make the payment.
Yep.
And people kind of thought, oh, this won't impact me, they're forgiven,
Yeah.
and then they go to buy a home and it's like, yeah, no, you should have made that payment.
It's important to
don't
stay
ignore
in touch with your servicer, work out payment arrangements, low payment, but yeah, you definitely don't want to ignore that.
Yeah.
Or hope it goes away, because
Yeah.
it won't go away.
Right. And yeah, some people are still on forbearance, whether they're, medical, right, still in school, whatever, they don't have to pay them yet. But I always say, make sure you know your due date and don't miss that due date.
Yeah.
Because then, yeah, your chance of qualifying might have just gone to 0%. At least temporarily, until we can build it back up. But, a 90-day late, that's tough that takes a ding on your credit. And unfortunately, usually it's just time to recoup from that.
Yep.
on these young kids, or maybe not young kids, just first-time buyers in general, that are struggling coming up with a down payment, or they have the good credit and they have the job. I know gifts are an option from relatives. What are the different options for them to come up with that down payment? They have all the other stuff, the job, the good credit, all the things in line, but they don't have all the down payment. What are some of the top options you see them utilize?
So I always say, and kind of back to your priority levels, right? We can't fudge your credit. We can't fudge your income. I can fudge your assets legally. No, but so gift, you mentioned it. Number one. Number two is a first-time home buyer. I'm looking at first.
Who can they get a gift from, just to kind of elaborate?
Well, technically family relative. Now, there are some outliers, and maybe you can You got more experience than me. Engaged works, and I think I saw recently where it was like an interested. I think employers can now. Am I correct in saying that, or am I wrong? I could be wrong there.
I'm not sure.
But
About that.
I typically will say family relative.
Yes.
So, aunt, uncle, dad, mom, brother, sister, right? Think of your immediate family. That's usually who we focus on gifts. If your fiance can technically give a gift. And I think they've made it a little more lenient on that. I know FHA changed some things with donor statements and stuff, but so gift, down payment assistance programs, and there are some out there where you don't have to be a first-time buyer either. They don't usually need it because they're going to have equity from one house to the next, but that is a thing. And then seller concessions, right? That's where we can use the seller concessions to, and in this market especially, and that's why as a buyer, high rates sound terrible, but you have less demand and you have more chance to negotiate, right? You guys can probably all relate to COVID. You had to offer $50K above list price, waive your inspection. Well, now you can get an inspection, you get your seller covered closing cost, and you might even get the price lower with the closing cost, right? So buyers it's a buyer's market more now, maybe not totally, but those are the three main things in terms of coming up with your down payment and closing cost. Would be, I would first look at first-time homebuyer program. I would look at seller concessions, and then gift. Gift is obviously not everyone has family to do that, but I'll always bring up gift and I say, hey, I know it's not a luxury for everyone, but I'm going to bring it up because the one time I don't, there's going to be grandma that's going to would have given $100,000. So those are the three main. Do you have any others?
Yeah, grants.
Grants. Yeah, there you go. Yeah,
depending on now that can depend on how much income. There's a lot of times there's income limits to those grants, and also kind of where you're buying at too. So some grant programs that may not be available in Pottawatomie County are available, say in Mills or Shelby, Harrison County.
Avoca used to have a really good one.
But so and a lot of times those grant programs run out of money. They're funded in the beginning of the year ish. And then once the funds are gone, they're gone. So, but it's always good to check out or to find it. To me, that's if a person qualifies, meaning that they're in the income limit category. I mean, free money is definitely the way to go. And then we look at those other options. Maybe it's a 0% loan where there's no payment, no interest. Gifts from family members is awesome too if they have that ability.
Are there some military programs too, or there were, where if you're in the military you get some things?
Yes, yeah. So Iowa traditionally has had the $5,000 military grant, and that's funded through the state of Iowa. And the funding ran out about a month ago, which is somewhat typical. And then July it'll probably re-up again. So there's it's just a matter of finding out what's available now in those rural areas. There's rural housing, so that's 0 down. So that's a nice loan for someone who's purchasing outside of a metropolitan area. So
what would be considered a rural city? Can you name a few?
Yeah, like Glenwood, Missouri Valley. The close towns.
Underwood. Trainer, would they qualify?
Getting kind of close. I
Are they?
don't know exactly where the borderline is, but yeah. So those communities, 0 down rural housing program. So, it's just a matter of coming up with the closing costs in that case. But
Sure.
Same with VA, right? Yeah, because VA is 0% down.
Yes.
No mortgage insurance. I think the VA product is phenomenal.
Mm-hmm.
Yeah, and have they lightened up a little bit on appraisals? Was there something to do with lead-based paint or something that was? I thought I had.
I think there's just people view VA and FHA very similarly, and
Right.
you guys can probably attest to this.
Yeah.
And the unfortunate part about that is, you could have one appraiser that's going to call something out on a VA, and then another VA appraiser not call it the same thing. So that's my biggest thing, is that appraisers, it's their opinion. Same with values and stuff, right? So, I mean, yes, they are a little bit more strict than your typical conventional, but I don't know of any recent changes.
Okay.
But I've been pretty lucky lately. So,
That's good.
yeah.
I've been seeing a little bit more on conventional loans, appraisers calling some things out.
again, that's the hardest part to like kind of regurgitate to a borrower and say, because I actually I was speaking with an agent actually that their deal fell apart because multiple reasons, but that appraisal was done. They had found another borrower, appraisal done. They didn't call out the same thing that the previous appraiser did. How do you tell that to someone?
Yeah.
Yeah.
It's like I
seen
have
that
no
before.
control over
I've seen
that.
that.
Yeah.
Yep.
Yep.
Yeah, it's a thing. So
Difference in appraiser.
yep.
And you don't get to choose your appraiser.
It's
It's
random.
random.
Thank 2008 for all that.
Yeah.
It's,
Which is good. It takes
No,
it
it's
off
good.
your back.
well, yeah.
Yep.
For the whole, it's good.
Yes.
Yeah, I just had a house today. Client has a conventional loan, and the appraiser came in and pointed out the peeling paint on the house. So had to have
Great.
the guy come
Great example.
yep,
Mm-hmm.
this afternoon and paint it. The picture that they sent was the front of the house, and I thought it was one section. So thank God I did the walkthrough today, because then go to notice there's a lot of other peeling paint around the house. So the question was, is it just what's in the picture?
Right.
Or are we talking all of these other spots around the house? And it was all the spots around
Yep.
the house as well. So it took a lot more paint to get done.
Goodness.
That was just an example for today.
Well, it's again, those appraisals are to protect not only obviously us as the lender and the banks, right, but the borrower too.
Sure.
I mean,
Yeah.
I'm not gonna buy a house if there's mold everywhere, right? Like
Right,
you know,
yeah.
so it's but yeah, obviously. Vice versa, the seller side's like, well, no, that's fine. So yeah, that's the appraisals are fun, but
Are you having many appraisal issues right now? Do most of them come back? Okay.
Recently, I haven't.
I haven't either.
Yeah.
I think during COVID, obviously, like appraisal gaps and stuff like that. I think now appraisers are just kind of over it. Like,
Yeah.
this house, whatever, and again, that's the whole, what gives something its worth, what someone's willing to pay for it. Well,
Yeah.
so that's a whole nother
Sure.
conversation.
I mean, the
but
market's a market.
The market's exactly. I mean, you got 5 offers and all of them are over asking, and the appraiser can't come with that price. But it's like, well, so lately, no. Maybe some minor things here and there, but no, values have been pretty good.
Are you hearing much about upticks in foreclosures, or is the market still pretty good?
I haven't on my end.
So I'm on X, Twitter, like all the time,
Yeah.
and you see the doom and gloom of, oh, they're up 26%, but it's from record lows. And when you look at the chart from
Yeah.
2008 to today, it's like,
Yeah, I mean, we don't notice them. We're not listing
No.
foreclosures, so we're not seeing them on the
no, I mean, personally, not at all.
Yeah.
In terms of nationally, I mean, you do have some areas of the country, but I stress to people, housing is so hyper local, right? It's like you're buying a stock of a company that's, the stock for everyone. Our market's going to be completely different than California's. So they might be having a lot of foreclosures when I mean,
Yeah.
first time buyers can't even go see a house before it's off the market, right? People are making a payment. So that's another thing that I think makes people very hesitant in this market and day and age is social media and the doom and gloom of, 2008 is coming again. Yeah. Foreclosures are rising. And it's like, really?
Yeah.
Compared to
No,
what?
we're not seeing that.
No,
Yeah.
we're
Compared to
not
when
seeing
you
that at all.
couldn't literally do a foreclosure because every house was in, so.
Well, that's again, a nice thing about living in the Midwest. We don't see all of that as in our community and being in the Midwest. I think it all kind of just trickles lightly into the Midwest.
Yeah.
We see it more on the
Our highs
West
and lows
East
aren't as
Coast.
high, and our highs aren't as high, and our lows aren't as low.
Yeah.
We're kind of more like this, whereas California, they'll have some great years and some really bad, where we'll have pretty good, so.
Well, the other thing is too, we don't have the vacation market you see. I mean, what are people
Fair.
going to do when they get in
Fair.
trouble? The first thing they're going to do is sell their second home, right? So
Fair.
Florida, Vegas, Arizona, those are all people's second home locations. So I mean, when times get tight, the first thing you're going to do is cut that loose first. And unfortunately, we don't have a huge vacation market here, although there are a decent amount of VRBOs around.
are.
It really surprises me.
Me too.
I'm just had a call from a client on one for $875, and I thought, wow, an $875 VRBO. But
Really?
so I think that there are some around here, but again, not what those other areas have.
With that being said, so on VRBOs or Airbnbs, and rental properties and such. I had someone ask me, and I can't remember the type of loan it is, but there's a loan that you can get as an investor that is based on the rent that you.
That's the DSCR I was talking about. Yeah.
Okay.
So
okay.
debt service coverage ratio loan.
Okay.
That's the same way they do our apartments. We're allowed
It's
to have
very
a-
similar
yeah.
to commercial world.
Yeah, we have a debt service ratio coverage we have to have to qualify, and
Yep, same thing. As long as the projected rents are equal or greater than the mortgage payment, it ratios.
what is that ratio? I know what they are for our
One.
apart. Oh, okay,
One.
so
Yep. So
that's pretty generous, because on most of your big multifamily complexes, I think it's 1.25.
yeah. And there are some wholesalers that are at 1.25. The lowest I've seen is 1. But if it's 1, you're almost guaranteed, well, for sure 20%, if not 25% down.
Right.
And to get to 1, you might have to have 740 plus score, right? So they're going to make sure you're good for it.
right.
You're going to have 6 to 12 months of reserves on top of that,
Yeah.
right? So it's doable. But yeah, DSCRs, I am doing a DSCR cash out right now on a triplex. So yeah.
Are you seeing a lot more of those? I mean, when I first heard about it, I had no idea what they were talking about. So I thought I'd bring it up because I think investors might.
Yeah. It's great because, we don't, number one, if they're self-employed, which a lot of investors, even if they're not self-employed, they have a lot going on in their tax returns, right? Don't need any of that. So they can continue to write off their income, or, we're not going to look at any sort of debt to income ratio at all. So we're not going to look
You're
at
just looking at the property,
the,
credit, and the down payment, right?
and the, yep.
And the
appraisal is the big thing, not income, appraisal with a rent schedule.
Okay.
So they're, now here's where I run into jams with those, or have in the past, is it was actually a house here in town, very, very unique house. And it was very hard to find comparable rents. And you can't really dispute, I tried to dispute it. You can't really dispute a rent schedule unless you have, I was like, well, Zillow has all these houses for rent at this price. Well, that's like, so me and the appraiser got into it a bit, but I lost that battle.
Oh,
But that would be one thing that, if it's your typical, celebrity home, cookie cutter home where you could find 1 million leases on those and say, yep, this is going to support that. But yeah, if your projected rents comes in lower, then, and typically though, you just go from 25% down to 30% down, or you pay points to buy the rate down. Most of these people that are doing DSCRs though have money, a decent amount of money, so they'll just buy the rate down to make a ratio, or they'll put more down to make
put
a
more
ratio.
down just to
But
make it.
But yeah, I'll typically really loop in the realtors on those to say, hey, if you had to give a number, do you think it could rent for this, whatever it may look like. So yeah, they're a cool product. I was unfamiliar with them when I first got in the business. I didn't know they existed.
Yeah.
And like you said, traditionally it's like commercial lending.
It's
Like,
very similar to commercial
commercial
lending.
lending.
Yep.
Yeah.
Yep.
Okay.
Boys at Pinnacle Bank. Shout out.
Are you gonna wrap this up or what?
Yeah. Are you, is that what we're doing
Yeah.
here? Okay. Well, we appreciate it. Is there anything you wanted to add that maybe we didn't touch base on that you want our viewers to know?
Can we keep Jason here another hour? No.
I'll tell you what. I want Jake to start asking some more questions. Here's what we're gonna do. The next one. He's sitting here. I'm sitting over there.
No.
He's awful quiet down there.
No.
Well, he's learning too.
I'm learning.
Yeah.
He was excited.
I
about
think this was
because-
super educational.
No, I think it was
Like, this
really
was
educational. I mean, we could probably talk to you guys for 2 hours.
I was gonna say, yeah,
That's
we
very
could, yeah.
I mean, the time has flown by.
Yep, and I will
just
tell you,
that.
It really has.
I think we bring in a couple of appraisers with you guys afterwards. We have some wrestling. We get a ring, and you guys fight it out at the end. Kind of appraiser
Ow.
versus lender, and
I got a couple names on my
yeah,
list.
no, I think that I think there's so much, and I learned something. I didn't know that credit card ratio thing, so I'll share that with people and
Oh,
share it with my
absolutely.
own kids.
Share
5
it with
to
your
10%
kids, seriously.
utilization. Don't go over 30.
Day the statement is produced. Key.
Yeah.
That's when you want to focus on that balance.
It would be interesting if you guys put together some kind of almost like cheat sheet for us that said these are some some high level things to encourage your buyers. Some of those little hints like
Oh,
that
absolutely.
because I didn't know that, and I'll tuck that away in my mind. So
Oh, we can do that. I will say though, nowadays with ChatGPT,
you can get it all.
yeah.
Yeah.
Yeah. What about Claude? Don't forget Claude.
Claude,
You know.
Claude.
All right. Well,
thank
thanks,
you.
Thank you
guys.
so
I
much, you
really
guys.
Thank you
appreciate it.
guys.
Thanks for having
Great
us.
job.
Appreciate it.
Great info. I learned something. So.
Yeah.
Good.
It's very
Absolutely.
educational.
Yeah.
Good.
Very
Good.
educational.
That's probably our most educational one, I
Yeah,
would say.
1000%. Everything about it was just.
That's
Sweet.
what we're here for.
Yeah.
Just want
We'll
to
bring appraisers next and let them recant on some of your
That's
stuff, and they'll
right,
complain
yeah.
about those lenders, you know,
Yeah.
like
Yeah.
those darn lenders try to get us, you know, and
Uh-huh.
and then we'll have a little matchup between us.
Yeah. But you guys can chime in on your listing values. and
Yeah,
come up
yeah.
with those.
Yeah.
Oops.
Well, again, thank you guys.
Yep.
Again, Mark, Dylan, thanks for everybody for tuning in. Next time I'm sitting in Jason's seat.
That's right.
And I'll ask more questions.
Better.
But for me, this time it was more educational. I needed to listen.
There you go.
So,
Awesome.
thank you guys.
Take care.
Thank you so much.